If you want to be an astute real estate investor, you need to know what's happening all around you. In the real estate market, when I buy a property, I have a very, very good idea what the value of that property is. We have a plethora of data that's available at our fingertips that I can actually go and look and find out exactly what a true market value is. We know exactly what we're getting into, and that's why that's important for someone like myself, is I'm looking to plan for retirement. I'm much more comfortable placing my money into real estate. It's much more predictable. I know that I can get a certain amount of cash flow on a regular basis. That's more important. Capital preservation, number one. Cash flow, number two. I believe in having asset allocation. I've talked about that before too. For everybody, it's different. For me, stock market represents only about 10% or less. I don't like that exposure. And you say, why not? The market's had, 9, 10% consistent returns over 10, 20, 30 years. The problem is that it's unpredictable. And what I mean by that is if you're investing in individual stocks, the S&P as a whole may have had a 10% return. But if you're buying stocks like whether it's Tesla or Intel or General Motors or Microsoft or, you name it, the problem is you don't really know what's going to happen. Let's take an example here. Today, JP Morgan released their earnings. They blew away expectations. So if you beat analyst expectations, the stock should generally take off and move up higher. But instead it went down. It's unpredictable. You don't know what's going to happen even when it beats. Now, can you imagine if JP Morgan's numbers came in even a penny or two below expectations? It would have gotten completely hammered. And that's what I mean by that. We don't have a crystal ball. We can't see what's happening. In contrast to that, in the real estate market, when I buy a property, I have a very, very good idea what the value of that property is. Because I know I can pull comps. We have a plethora of data that's available at our fingertips that I can actually go and look and find out exactly what a true market value is. Plus, there's actual calculations you can do based on the earnings that the property is generating. There are cap rates and things like that. That helps me identify what would be a fair market value for that property. And it's not going to gyrate, more than 5 or 10% like that, what you see in the stock market. Like even today, for example, JP Morgan went down. You say, okay, what if you don't own JP Morgan? Would you believe that many of the other financial stocks also went down? For example, Visa, Mastercard, they were also pulled down. It's almost contagious, if you will. When a particular company, a major company in that industry goes down, it drags down other companies within the space. So these are the reasons why I'm not a huge fan of investing a significant amount of my assets directly into the market. Now, thankfully, we don't have to worry about that in real estate, and PropTech itself doesn't have to worry about that because we know exactly what we're getting into. And that's why that's important for someone like myself, is I'm looking to plan for retirement. I'm much more comfortable placing my money into real estate. It's much more predictable. I know that I can get a certain amount of cash flow on a regular basis. That's more important. Capital preservation, number one. Cash flow, number two. So I don't want to put myself up and open to that kind of risk. And this is why, I look at the market. I want to know what's happening. Doesn't mean I'm necessarily investing in it, but I do keep an eye on it. Today's post really is to kind of alert you to what the potential pitfalls can be and what can happen when you're open to it. I'm not saying that you don't know that. You may have also had similar scars. And I actually have experienced this before because we had exposure to a number of stocks in the past. And then, for no rhyme or reason, it goes down. So I hope this has been helpful. I'd love to hear your thoughts. What do you prefer? What kind of allocation do you like to put into the market? And how much are you weighting towards, how much weight are you putting on real estate? Look forward to your comments. Thanks. Bye.